We're going to turn now to Taiwo Adija, Director of the African Finance Corporation. And Taiwo, if you could explain to us, in your work, you work across many borders, what are the key factors that you think, from your perspective, would reduce the impediments and increase trade flows, and where can the World Bank Group really support you, as well as if you could mention some specific project examples? Thank you.
Thanks, Barbara, and thanks for everybody here. Yes, the impediment to free flow of trade in Africa, one can distill it into one word, which is infrastructure. And here we will be talking both of physical economic infrastructure as well as non-asset or non-physical infrastructure in terms of regulations, etc. Now, the nature of Africa in terms of its geography and its partitions ultimately makes intra-Africa trade even more difficult than other parts of the world. If you look at the fact that Africa, with a population of just a little over 1 billion, has about 54 different countries, 9 different territories. About a third of the countries are landlocked countries without access to the sea. Trading among these countries is always going to be difficult. And the fragmentation of Africa in terms of so many countries and so many territories, etc., also means that the critical mass required to do very big infrastructure projects or to do big intra-trades is also usually not present in Africa. So because of this, we have to look at ways and solutions to create to reduce those impediments and create the measures that will encourage free flow of trade in Africa. And if we start talking about infrastructure, under normal circumstances, Africa has significant infrastructure deficits. Either we are looking at transport infrastructure, we are looking at power. In telecommunications, I think we have done fairly well, jumping from the fixed line into the wireless. But in terms of trade flow, I think the critical infrastructure that needs to be improved, that is currently lacking, is transport infrastructure. And for those who have worked in Africa and who have traveled in Africa, this will be more or less things that we all go through and we all live through every day. I live in Lagos, in West Africa, and I think West Africa is probably even much more difficult than other parts of Africa in terms of transport infrastructure. I mean, going from Lagos to, say, Guinea-Conakry, which under normal circumstances should not be more than 1.5 hours flight away, sometimes can practically take you 2 days, to move around. And even going from Lagos to Côte d'Ivoire, used to be 1.5 hours flight. Now it takes you a whole day. You need to leave in the morning and you only get to Côte d'Ivoire in the evening. And this is talking about just movement. Now this is talking about movement of people. Now movement of goods is even more difficult. And I remember we were looking at a project, we were looking at a steel power project. That's my company, the Africa Finance Corporation, incidentally together with the AFC. We are looking at a major steel project in Sierra Leone, because Sierra Leone has some of the world's best iron ore deposits. And we are looking at a steel project. But again, because Sierra Leone is a small country, the market they were looking towards is Lagos, is Nigeria, where you have the critical mass. But then you find that even when you produce the steel at a relatively good price, we look at the cost cost percentile for that particular plant, and it's probably about in the 25% top in terms of cost efficiency. But then, how do you move the steel products from Sierra Leone to Lagos? We found that it's actually a lot cheaper to bring steel from Dubai to Lagos in terms of transportation cost than to bring it from Sierra Leone to Lagos. And the fact that that infrastructure is just not there to move the steel in itself rendered that project unviable. And you can look at several other areas as well. Either it's in road transportation, it's in ports and facilities. I mean, I think we have only one deep sea port in the whole of West Africa. So most of the time, when big, when big ships come into the region, they have to stay on the high seas, and then you have the baby ships going to the mother ships to bring to bring the goods to the shore. And again, you basically add 30–40% to your cost of transportation. And that alone, if you look at the fact that, if you look at Africa in isolation, then you might say we don't have a choice but to do this. But if you are talking to people, investors, who have choices, who are not only looking at Africa, but they are looking at other parts of the world, they will at some point say, why do I have to go through to all this trouble? So the building our transport infrastructure is probably the most important aspect of improving intra-African trade. West Africa, frankly, and that's my region, is probably the more challenging. By the time you go to Southern Africa, I think things are a little better, not as good as it should be, but at least a little better. Having spoken about hard infrastructure, let me also speak quickly about soft infrastructure in terms of regulations, etc. And these are areas that I think the World Bank Group might also be very, very supportive of Africa in terms of improving trade flows. We have several regional economic groupings. We have the ECOWAS, we have the SADC, we have the COMESA, we have the East African Economic Community. These economic groupings have done very significant work in terms of harmonizing regulations, modernizing regulations, etc., to make inter-African trade flow, to create markets of groups of countries that can provide that critical mass that will encourage investors to want to come and invest, and the goods flow among the different countries. There are a few projects that are currently going on in Africa that might assist some of the issues that we are discussing here. I know the Africa Finance Corporation, again, is advising, for example, the governments of Nigeria, Benin Republic, Togo, Ghana, and Cote d'Ivoire in building a superhighway that will run from Lagos to Abidjan in Cote d'Ivoire. The governments of the 5 countries have committed to that project. I believe they have already released about $50 million to do the project development, etc. That's a project that obviously the World Bank can be very supportive of, and I believe it will land on their desk as well. Also, the power transformation that is happening in not only in Nigeria, in several countries in Africa. The World Bank also has useful instruments that can support that process. I know that they are actually quite involved, particularly in the Nigerian power sector privatization through their partial risk guarantee instrument. It's useful, but it's still a difficult instrument to use. But I believe we can make it more user-friendly, I will see. And I know the moderator is saying we are running out of time, but I don't want to finish this without talking about a very critical missing link, which is project development in Africa. That's something that we are still lacking. Professional project developers who can take early project risk, who can provide early equity into projects. Just as a lot of people have said here, we are finding out that the issue is not liquidity. Liquidity is actually available. It's the fact that we just don't have bankable projects. And you are not going to have bankable projects if you don't have professional project developers who can take early project risk and put early equity and do all the hard work that brings a project from being just a concept into a bankable proposition. And we are beginning to have some of this, and they need to be encouraged. I think something that the World Bank could do is to tell the AFC not to object when we want to pay development fee to these project developers, because this is hard work, and they need to be encouraged to continue to do the work. Thank you.
I thank you. Brass tacks. This is exactly what we need. We are frightfully, again, behind schedule. So if there are questions, can we do it really quickly? Any questions here? Yes, here, please. Please identify yourself. There's a mic.
Thank you. My name is Ransom Owen. I'm the Group Managing Director for Taiwo Power in Nigeria. For GE, I think we're one of your best customers. We have 13 turbines and can quickly ramp up to double that size, certainly 10,000 megawatt next 10, 15 years. You spoke of an area that I think is probably very important, but it's quite unbeknownst to us. The innovation in terms of how you can structure some of the financial issues. As you may be aware, you are also aware of this, the issue of single obligor limits or sector obligor limits for local banks is basically at the maximum level. And for us, buying 3 power plants from the government is $2.1 billion. We need a consortium of banks and international lenders to come into play. So whether it's GE Capital or other innovative solutions that you may have, because I think I heard that from you, I think we'd like to understand more how you, as an original equipment manufacturer, can actually help your own situation by either in the downstream gas infrastructure and in the motive turbines, but if the financial instruments can be put together that helps maybe that early part entry, it'd be helpful if we can have sort of partnership, because you are our partners both there and elsewhere in Africa, whether it's distributed generation. Plus your maintenance facility in Calabar is also my home state. So I'd like to learn more about how you can provide that instrument for us. And for the World Bank, I think perhaps an area that we need support is how to prepare or define infrastructure as an asset class. For a pension fund or any other investor class institutions to invest, it's not easy to simply say, okay, power is now deregulated. It's an asset class. It's not an asset class. So this is one key area I think the World Bank can put some of its resources in helping countries how to define their assets to an investment class products. It may take time, but we need to do that so that there's an exit sign, a clear line of sight. So this is, I think, one of the key contributions that we can, if we can redefine some of these assets to an investor level, because it takes some time for everyone to go through the test and actually qualify. A utility company cannot just be traded overnight. Maybe examples of Kenyan Power or NAM Power can go to the market and others, but Nigeria has 11 new distribution companies. They can't go to the market because they haven't turned a profit, and so on and so forth. I think some of these areas need to be looked upon carefully on how we can actually define that. That would be my contribution. Thank you.
Wow. That is going to take some private consultations as well. I thank you on both fronts. Another question quickly? Anything else? I'm being told I have to do this, right? Okay, so why don't we hand it over? But of course, I really think we have to accept the challenge of your questions and follow up after this session. So please, do you want to make a comment?
Yeah, so a lot to talk about, and we don't have the time to get into all of that, but I think the key is to try to attract investors. I mean, we're now talking globally to a number of investment groups about working together in a way where maybe GE takes a portion of this investment group or put some investment alongside other people, and then helps to get other people comfortable with the project, because we do have long expertise on the ground. We have a lot of people there. When we sell products, we'll service them for 10 or 20 years. And those are things that get people comfortable. And if we take a little bit of the investment risk as well, that also seems to get people comfortable. So I think that, probably through private investment groups is the first way we start to bring liquidity to these projects before you would have like a truly public capital markets type of security that you could sell. But private groups are starting to do that. You see a number of funds and joint ventures forming, and we're trying to do a few of those ourselves.
Okay, we have the seeds of getting deals done right here. So with that in mind, oh, you want to make a comment?
Yes, I just want to make a comment on the issue of the infrastructure as an asset class, because that's also something that the AFC, together with the Central Bank and the Pension Commission, has been working on, together with the Security and Exchange Commission in Nigeria as well. I mean, the whole concept is to be able to securitize the cash flow from mature infrastructure assets. And the Security and Exchange Commission is already developing the securitization regulations. So if you have, we don't expect the pension funds, etc., to take project risk in that sense. But if you have developed your infrastructure assets, it's operating and it has a stable cash flow, it should be possible to securitize that cash flow and issue securities based on those cash flow, which institutions such as pension funds, etc., can then invest in. And the original investors in the original projects can take some of the cash out and hopefully invest it in other infrastructure projects.
We have solutions, is the point. So we're going to follow up with this. This is great. Can I please ask everyone to thank our participants here? Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.